All right. Well, everybody, welcome to Planet Wealthy online meetup. We are for educational purposes only. If you are seeking, please seek a qualified broker or investment advisor. We do not give investment advice. Everything we talk educational purposes. We look at trade ideals, and that is only if you need a investor or a qualified broker. Please seek one out. And we go from there. Now, looking at the market, I wanted to do a market update Thursday, but I had the same problems with the computers on Thursday, but I'm glad everything is fixed now. We had a couple of things happen on day of last week, or actually Thursday of last week. As you know, we've been playing this market down. We've been looking forward to fall. We've been right on the money with it. It's a beautiful thing when everything works out your way. What happened is, and I know we talked about this before, if you look at the market, look at in this case, the Qs, and we're going to look at some longer term charts here because now we're talking longer term on this little rally up that we're having right now. You can see that the market got extended outside the bands. So remember, one key thing is when you see the reasons why we use Bollinger Bands is we look for extreme volatility. In this case, once we broke out of the narrow volatility that we had and went into some real true volatility, you can see the market trade outside the bands. We want to see the market trade right on the bands or right inside of the bands. In this case, you can see as it moved down on 1010, 1013, 1014, 1015 is way outside the bands by 1015. Even on these days, the 1030 was trade back inside the bands. That's more ideal what you want to see. Then on 1015 Thursday, I think that's the day we were down like 300 some points at one point during a market day. Then it traded back. That's the day where I couldn't get online. I wanted to do a market update. It might have been Friday morning to get online. So we kind of missed this. And it pains me to say that we missed it because it was set up perfect. You can see that it was outside the bands, and it's set up almost like a hammer. Some people that took the candlestick class, this is not a hammer, but it can be a hammer. Only it's not a hammer. The shadow at the top is too long. We want a lot smaller. Basically, what it is a green candle, but it's red. But what it does tell you is that at one point it was as low as here at 90.24, and it turned around top 92.76 and during that market. So it almost turned green back that day on the Qs. And if you remember that trading day, the market did turn around very, very hard. So as we look at this, back up near band, but it was still outside the band. One thing that we know is long shadow at a bottom or formation of a hammer. You look for a retest of that low. Okay, it might not happen every time, but a lot of times you look for a retest of the low. And in this case, this low here, where it came back down to about 90.39, pretty close to the low, 90.24. Remember, it's never exact candles. It only gives you the signal, the early reversal signal. In this case, we got this could have been an inverted type hammer, even though it's not inverted hammer, but it had a retest, and then it sold. Bought up, and when I say sold, they cover in shorts. It traded up and then down. So in this case, it was definitely looking to trade back up from here at this point, or we could have traded sideways again lower. In this case, we actually popped up on Friday. This was Wednesday, Thursday, and then we actually popped up on Friday, and then we closed with a doji. Now the question is, do we continue? And that's the key. How far do we go from here? There's a lot of bearish signals. There's a lot of bullish diversions, and there's some bearish signals longer term. So this is just a short covering rally, or I call it a short covering rally, because there's a lot of people that were short the market that are now selling because the market is moving higher. But all they're going to do is look to get back in short, or they're going to get caught trying to catch the market back to the upside. Now, to me, it's very easy to say, oh, yeah, we're going to go higher from here. It's time to buy the market. That's not the case. So let's look at a couple of things here. One, I don't like to use volume bars, but you can use them at times. Here in this case, you can see the volume that came at the bottom. That was a clear sign that something was changing in the market. Then the last 2 days, the volume has lightened. Now, we have getting lower volume bars over the last 2 days, which kind of signals that there is some going on in the market, or like I said, short covering. That's happening that's kind of leading this rally right now. Our MACD histogram is turning over, which is getting smaller, which is trying to turn back to the bullish side, which can signal another bullish move. Our MACD lines were away from each other and have now kissed back together. The red line is trying to cross back up, which signals up move is in progress. It doesn't mean the market is going anywhere. It doesn't mean it's about to go on this big long run. It just says that right now the market has momentum to it. All right. Our stochastics has came out of the oversold. We know the general basics for using MAC, the stochastics, that when it crosses above 20, that is usually a buy signal. It is above there. But one thing that I do like about stochastics is that when you do get to cross to the upside after a down move like we just had, you look for it to get towards 50. The K line is now approaching 45. We will probably hit that 50 area there tomorrow. You'll see that stochastics hit the 50 and then turn back down, and then you'll get a retest of where we just came from. So that's going to be very key as we get closer to 50, 60 area. Let's say 50, 60, because it's not going to be exact. I don't want nobody to think anything is exact or nothing is exact with the market. Everything is probabilities, and you have to try to use these things to put things. So in this case, we're going to look towards 50 to 60 in this area, and we're going to see what the market does. Now, our own balance volume is still weak. You can see the amount of own balance volume that came out. That is our true volume read. You can see that we did have some volume come in or trade up, and a lot of that could be short covering buying, but it did turn up off the negative or off the line that would have took it negative. So that is something to keep the what it tells me is that volume or the bullish sentiment is still there in the market. Our ADX line, now this is interesting because this measures the strength of a trend. And with the strength of the trend, it's going to tell you how strong is this trend. Remember, anything I said above 20 is to be established. Above 25, the trend is established. On this downward trend, we started to measure, we started to move higher as we move 20, 22, 25. Even starting to turn, the trend has continued to rise. Even until today, where it moved 0.2. Now, 28.32 from yesterday, Friday, to the 28.53. That 0.2 move is considered a weak move in the trend. So it definitely is a sign that the market could be changing for the short term to the upside here. That is something to keep an eye on as we go further here. But overall, the downward trend still has strength within this bullish move to the upside. So still the question is, what are we looking at coming? So as you can see here, we broke this area here. All right, that was an area that we broke. We came down to our target area that we talked about last week and the week before of 90. We hit that area and we turned around. So now the next stop is coming back up to 95. 95 should be tested tomorrow on the Qs. If we can't get above those Qs and we get a consecutive days down or a trade right below there, we definitely probably will start to see a turnaround and a retest of this 90. worst case scenario, we're going back to the 50-day moving average, and we will reach. Well, this is the 20. The 20 has crossed the 50 for everyone that likes the death crosses and the bullish crosses. But this case, this is the 20-day moving average that's sitting at right now 90, sitting at 96.35. There's a chance for us to test that. What I want to see is if we can close above this 95 and then the next day follow. If we can do that, the market is probably going to try to trade higher back up into this area, 97, 98. All right. I truly don't believe that will happen. Looking at this, this is simply a relief rally, and that this market is going to trade up and then bounce off one of these resistance areas, either this area that has been that was a strong buy area that became old support becomes new resistance. That is becoming new resistance right now, or it's going to bounce off the 20 and come back down. I can't see us getting like a 50 at worst case scenario. Cannot see that. I am looking for about Wednesday or Thursday for this market to turn back down to the downside. If we go to a weekly chart, and it is taking forever. Here we go. All right. And I'm going to take it out a couple of years so we can see it clear. We need it. We need some relief on the weekly chart. We need up move. All right. You can see on the weekly chart, we had a nice sell off the 50. They started buying at the 50 on the weekly chart. That is the next key level if we're going to see lower prices that we talked about in the future here, is the 90 area where the 50 is holding it. Once we break the 50 on the weekly chart, it is a great chance that we're going to 80, all right? In the meantime, we have to watch these levels up here on the weekly chart, and I'm going to each line here so we can. All right, so you can see that's forming right now, and this, remember, this is one day, is that we were outside of the, we were away from the 3 and the 5, and now we came back to it. So now we're looking at this, the market trying to pull up here after we had this turnover. So we got a rounding top here that is a formation that can lead us to the downside. Now, this is old classic technical analysis. Classic technical analysis don't work as good as it used to because of things like candlesticks and the computers and all this stuff has kind of distorted the old classic pattern. They fail more than they actually can lead to a big move in the market, or what they used to tell you. But in this case, we still had a nice turnover. We hit back to the 50, so this is a natural bounce. We have the 20 that's sitting at 94. No, I'm sorry. The 20 is sitting at 96.33, about the same level as daily chart. So we could retest that area, but the thing is, can we close above those levels? So for people that are out longer term, that is going to be the key to your next move. If we hold at 95, or if we get back to 96 and we can't break it, that area is going to be our next shortened opportunity to take this market lower again. All right. So we're going to keep an eye on those levels. Now, this market has definitely turned down. We're going to see a lot of volatility because we're still in that volatility phase. The VIX is letting us know that we have some volatility. So expect more up and down moves. It's not just going to go straight up like it's been doing the last few days. Expect more volatility in the market. More longer term, we're going to continue to watch this monthly chart here, as we only have 10 trade, not even 10 trading days, but more like 9 trading days, I believe, left in this period. We're getting closer because this monthly chart, where it closes, is going to be very important for what we're trying to do in the market, or what our next move will be in the market. And we are holding here. You can see right now we have a form of a evening star pattern for those that have taken candlesticks. This is 1 month up. We got a doji type or small candle with a downward move. If this continues to stay down here, then this is a complete turnaround that's happening in the market. And that just like in 2008, or I mean 2007, we talked about September or our target date, which this year was September 25th. It turned over in that month of September, and it continued down from there. All of 2007 going to 2008, from September to September, was very bearish, and it was a downward trend. Of course, we had some up months in between there, but it was mostly down. Then we had the big intensified crash in 2008. We are setting up for the same scenario from September 25th to September 13th. In this case, September 15th, because the 13th falls on Saturday or a Sunday. So we should expect the release of whatever's going on, or either before that date or right around that date, or it could be sooner. We already know that we've seen the results of everything that we talked about already in play right now, from even the down move we had just now. So we're going to continue to evaluate how this market closes out over the next 9 days. Any option trades that you have, you must be out to November. Start out to December, if not January, because of the volatility in the market. We have to look at the December, January options. We do not. We want to kind of start moving away from the November, because volatility is a little wild right now, and that will mess with the option premiums. Looking at it today, that is kind of the scenario that we're kind of going into right now, especially with a lot of short covering that's going on. We're going to be jumping in and out of these stocks because they're going to be a little confused. Now, one key thing that I really want to point out is that's our ADX. It's a real live true indicator of strength of a trend. A lot of people do not use it. They're dumb-minded that I use. But if we look at this, just a base scenario, it's going up. For me to know that in a strong trend or a strong move each month, I want to see 0.50 or better from the previous month. In this case, 40.78, the 42.33. Then this month we are now at 41.90. So the fact that we went negative is a sign that the bullish trend that we've been in since basically, in this case, it gained strength in 2012. Over the last year and a half, is telling me that we are. This is the first time that it has went negative, and that tells me that this bullish trend that we've been in has now ended, and we can look for more sideways to downward action. It even lines up with what we've been talking about over the last 2 months. So that is, for those that's kind of, seeing this market move up a little bit or whatever, it kind of tells us that we're still on the right path longer term, because remember, our target is next year. So you can see the volume overall is still coming out of the market. It's turning. The stochastics, MACD is kind of turning. Whenever you get a MACD up near 20, it's getting extreme. That means momentum has been rolling, and it's getting kind of extreme. It doesn't mean it can't keep going extreme and that people are overly bullish in the market and they need to come back to earth. And that's really what's happening here. People are too excited. Even on this downward move, the indicators are still pointing that there's still more people really bullish in this market or really excited about this market. And they keep messing around and going to get crushed. Probably the opportunity can go out, but we will always measure that as we go forward. Right now, we have to take the stand of, as the market rise, we will look to short. All right, and that is the attitude, or that is the mindset that you need to have as we see these things turn over. Until, again, as I was stressing a few weeks ago, or maybe a month and a half ago, that top was never taken out here on a retest. When it comes up, give it a second here. on this test here in August, it kept failing. Every time it tried to rally up, it failed the next time. We never got confirmation, and that was our first sign in August that this market was getting tired. And remember, I was saying that we could not go long unless we get back above 100. I'm still in that same boat. We might go here, 98, only because if it gets back to 98, we got some serious momentum on our hand, and that's because the 50-day moving average is right here, right at 97.75, and people will buy back into the market based on that. So, so now we can use that as a measuring stick now that we have had a nice correction or a decent correction in the market. All right, we went 10%, almost 10% in the market. So a lot of people were kind of happy and said, okay, the bottom, that was a nice correction. Let's move back up. All right. Here's another area of that people bought at that got stuck in this rally. All these people lost money right here. All right. All these people were hoping that the market get pushed higher. It never did. It sold off. That's what caused the increased selling. Only moved down is because all these days people were buying and they were trying to hope that the market would push, but no new buyers came in behind them, and that caused them to start selling along with everybody else, and that's why we had the extreme sell-off. So if the market cannot get back above this zone, I can't see a new trend developing. All right? We can definitely go back there, but I really would like to see us get above 100. If we can get above and test it where it stays above 100, then we got a new trend, we got a new rally on in the works, and we can go long the market and long hard the market. Until then, at this point, because there will be opportunity to trade up, I might send out some short-term moves up, but really for the people that's not as experienced in the market, you want to look to just wait, be patient, and look for the opportunity to short the market because it's coming again. And really, from experience, I really believe there's a good, this market probably pops up another day or so, and then we try to come back and take out this 90 down below here. I don't know what will be the catalyst for it, but I believe that we will come back and take, just like we saw it here, we're probably going to try to come back and test this 90 again. All right. And if we take out the 90, then we going down a little further. All right. Now that's the Qs. Let's look at it from a S&P perspective. And we all know that the S&P is the true storyteller, because they trade the E-mini. This really is the main thing. The only reason I look at the Qs is because there's a lot of big money in the Qs right now. And this is one that if we do get a nice fall, we will see 50 on the Qs, maybe even lower in the future. I've been studying the charts a little deeper and going back through history and looking at it, it is saying that we could go back to the 1995 lows in the market by the end of next year. It's very possible that it could happen. So it's something to think about and look at in the future. Not right now. I mean, if you want to go some short, long, what they call leaps options, you can. That is not a problem. I don't see anything wrong in that. Because your stop is when we take out these tops. In this case, it's 2019 on the S&P. Remember, we couldn't take this out, and we failed. Every time we went up, we closed back down. That was failed breakout because, remember, we never buy breakouts. We always wait for a retest. Never stocks. I don't care how fast or how far it goes up after breakout. Never buy a breakout because it's going to come back and retest. And it has to test the buyer's hands. And they test the weak hands. So when it breaks out, it might go up for another day or two, but let it come back down, retest, come near that area. If it holds and comes back up, that is your opportunity to buy. All right. This is the S&P. S&P is trading down. You can see here, this is a beautiful hammer on Web last week. It was a beautiful hammer. The next day gave you a spinning top and doji, which is major indecision too. You can see the shadows on both ends. And then we had our turnaround on Friday. Today we popped up. We are right above this line here, which was our resistance level. We closed right there on it. 1909, we closed. We went as high as 1905 today. So we need a close above 1909 to really see a change in the market. Now, this right here, I call it a pivot point. All right, change because we have now taken out this big candle here. For those that have taken our technical analysis class, you can see here, this is the hammer. This made the low. All right. This is a big bearish candle. We know that we always want to trade halfway inside the bearish candle. Once we take out the high of this candle that made the low, we are now trying to look at a pivot point change. And all a pivot point changes, if anybody's familiar with a pivot, is that you're changing directions. All right. And then you always have an anchor or a somewhere that you place down. And this is where the hammer was the anchor. All right. It turned back up, came back up, and now we took out this candle. If we can take out the top and close higher tomorrow, we now have a pivot point to say that we could try to trade higher. Again, that's where we look at what's ahead. We got this 1925 area. That was a strong support. We could very well be headed back towards 1925. That happens to be also where the 20-day moving average is around, which is trading at 1935. So I would not be surprised if the S&P gets to 1925, and then we'll see what happens. We gaps on this chart, and we know our gaps are bullish. Especially this is a very common gap. It's not a breakaway gap, but it is a common gap. We also had it on the Qs. It's very small. I like small gaps. It always leads to usually a move up, and that's what we receive. So this is a short-term perspective. So if you long or you down on some positions that were down because you didn't sell them because you wanted to hold them, which you know is nothing new, but you might be getting a little relief for right now. If we go back, let's go look at the weekly chart so we can see what's happening in November. Of course, this is the first day of the week, so it's kind of hard to tell, but by Thursday we'll have a more clear picture of what's happening here. You can see on the S&P weekly chart, it hit the 50 just like the Qs did, and that's where it broke the 50. That's what led to a huge sell-off, and then it turned around and closed right back at the 50-day moving average. Those people signed, and then we got the same reaction today. So, again, we can get a move up. Well, let's see what happens by the end. It can trade back. Averages are within the 1929, 1925 range. Our 5-day moving average is at 1929. So let's see what it will look like at the end of the week. That is a nice, decent hammer that we have formed here, right off the 50-day moving average. So that just tells me that investors are not ready to get out the market yet, even with the Ebola. Not scared anybody is what it's saying. Or the market thing into a real happen. You can see here monthly chart again. S&P, same thing. We came down, we broke this support area, but then we have now came right back above it. All our charts, even the trend indicator, it has turned over, which is a clear sign of weakness to me, which tells me that we definitely can go lower when that trend, because it has not changed since 2012. Or it actually, when the trend actually started picking up strength, was in 2012, and it's been going between 2013 all the way into the end of the year here in 2014. So for us to turn over this month is a clear sign of the weakness that is behind the charts. So that's why I said you have to really be careful, and we are going to look to as we go as this market tries to move higher. All right. know we are in earnings season, so people are going to try to use earnings as a catalyst. Apple had good day. I still think that stock is not a tradable stock anymore. We got burned on it once, and I kind of called it off and said not to trade it anymore. I hope nobody has been trading it because it hasn't did anything. Um, Even on earnings, if you traded options with it, you're probably going to get crushed on the premium because the stock only moved $1. Um, we can get and questions on the market before we go forward here. Any questions? Anything anybody didn't understand? I want to make sure I'm clear. All right. Apple, you can see, has traded back to its 50-day moving average. It had a nice high wave doji. It had an inverted hammer. It had a gap up, and now it had a move up today. On top of it, it's up $3 based on the move during the market hours and the move after hours. It is up 360 total for the day, which is a decent move for Apple. If it can get back above the 50 tomorrow, which I believe it probably will, it's probably going to move higher and rest this 102.50 until you break and close again and retest. That's when you look to trade Apple. All right. Until then, I will leave Apple alone. If you long just the stock itself, then you might be okay. But if you're messing with the options, the premium is going to be a little out of whack, but they should just after the open tomorrow. But again, this is not a trade that I like. Ever since early September, August, it has been a trade that you just can't trade. You can see how wild it's been since basically August 20th. It popped up, popped down, and one day it gave all those gains back. Then it's been up and back down. It's just been a wild stock to trade, and it is an untradeable stock right now. You could have been selling premium maybe against it up here, but other than that, there wasn't much to do with Apple, but just sell premium. And that's probably still the case until you see it break this area. All right, but it happens at the earnings because earnings always change stocks. Earnings always change the sentiment. It always changes the way people feel about it. It's just like the Fed coming out and speaking for the market. That's the one reason why we even have this fake rally right now is because of the Fed. At least that's the excuse they give. But really, we just hit some technical levels that people like. CMG was one that we talked about falling. We've been talking about for 3 weeks. That is going to close this gap. Today, it was down after about 25 points. We will see if it can close this gap. The gap high is 596. We will see if it closes this gap over the next few days. It was trading at 625 at market close or after a market close after the earnings report. So the goal is still to see it close this gap. It might close this gap quickly and then turn back around, so pay attention. If you are in this trade or you have been in this trade, it is working out the way we expected it to work out. Now we just need to see if it's going to go ahead and close the gap. This gap needs to be filled. All gaps are normally filled, but sometimes it takes years for them to fill. In this case, the fact that the stock traded in a range of 675 to 700 tells me that nobody wanted to buy this stock up at that area. So it tells me that they're going to probably try to push this stock back below 600 so that they can buy this stock up again and take it above this level. All right. And that's probably what's happening. You probably have profit taken now that they have reported earnings. The earnings were outstanding, but the guidance for going forward wasn't as great. They believe they might have lower sales in the future. So it's just something to look at that's not going to scare people away from buying this stock. But they would like to see the stock at a cheaper price. So we should see this trade work out for us in the future here. I want to go over, let me see if I can go to the virtual account here and bring up those trades that we did. I don't know if anybody actually treats stocks. I haven't heard many people talk about it, but we did I did put some of the trades in this account to kind of keep an analysis on it, some of the trades that we're doing. And it's taking to come up here. All right, so let's go to analysis here. Now, this, I believe this is all October. We might have been in early September too. We had the Apple trades, but the big trades were the Qs. So yeah, they'll go to Apple trades. Now I always buy these in lots of 10 or 100. We had the gold trade. We sold out of that, and then we had Qs. The Qs was 20 lot. We bought them for $263. It netted you back $752. That netted us 10,000, and then the S&P we had 10. We bought at 277. Netted us 1131. That brought us 85. This was actually bigger than that. I just wasn't able to get to it to sell. It was actually a lot higher because I actually sold on after the move up, but I just wasn't able to get to the virtual account and actually sell them. The Apple trade, you can see those didn't work out, and that's when we declared that we wasn't gonna mess with it for a while. And then the gold trade didn't work out either. So, but our big trades that we have been focused on, the Qs and the SPYs, those worked out beautifully, and we're gonna look for the next opportunity to short those trades. Now, any stocks? Let's go over any stocks that people are currently trading or want to trade or looking to trade or want to learn some things about them. Let's go look at those right now. So if you want to start giving me stocks, we can go through them.
How about Taser, T-A-S-I?
T-A-S-I?
T-A-S-I, Taser.
T-A-X-I.
No, Taser. T is in Tom, A is in Apple, S is in Sam, R is in Robert.
Thought you were saying
That's
Taser.
it.
All right. So Taser is now traded back to a gap. It's almost like what we're trying to see with Chipotle. Traded back to the gap, and now it's holding at 14. Now, the market environment tells me that since September, you had this double top, bearish and gold patterns. You traded down inside this gap. Now you're getting these candle reversal patterns. It traded back to the 50, and look what you got at the 50. You had a form of a shooting star, all right at the 50-day moving average. Now, you have this long candle, which Mike, from the candlestick class, that 50% is support. It did trade up, and for some reason it won't go away. All right, it did trade up today and off of that support. Now, it did close right at it, so tomorrow will be key. If it closed this whole candle, you're looking at you're looking at a minor form of an evening star pattern. I would just say a reversal. If you see it take out 14, then I would be a little worried about this stock. It's probably going to come back down to 11. Not real bullish on it. If you're looking to trade it up, it needs to get above 16 to get a real bullish move. If you're in it right now, I will have a stop in right here. If you're in it to the upside, if it closes below here, it did here, but it bounced right back. That's what led to the move up. If it closes above this level, more than likely it's going to be on this Bollinger Band. It's going to lead to a more move down, bigger move down to the downside. So really not bullish on it. It's more of a neutral stock right now because it's trading in the zone between 14 and 16.
Well, keeps on getting news that there are people that are buying their cameras.
Well, when do they report earnings?
I got to find that out. I think it's coming up.
It might be something to look at because earnings could change the whole look of this stock. Remember earnings that you can't predict? It kind of changes the way stocks look. Technical analysis don't tell you much about it. All technical analysis can do is tell you where the money is probably flowing right at that point.
Right.
So in this case, money is kind of sitting on the sideline, or they just sitting back waiting. So you gotta just this stock can take off to the upside, or it can sell off even harder. So it's just something. It's really a crapshoot. Unlike Chipotle, Chipotle had great earnings, but the stock was way up there and people had bought. So it was a good opportunity for people to take profit and sell it off. So that's why it'd be interesting to see if it can close that gap tomorrow. Or if not tomorrow, the next few days here.
Right. I'm going to watch it.
All right, what else are we looking at?
Visa, Red, Visa.
Which stock?
Visa.
Visa?
Uh-huh.
This was our favorite. We called this stock to go below 200. It went to 195 and then had a huge bullish engulfing pattern. It is now trying to get back to the 50-day moving average. Again, the 50-day moving average is probably going to be key to the whole market. It's really what this is lining up. We have the 20 here at 208.73. We have had a huge move or short covering rally in this market, and it's got some momentum with it right now. But these two areas, 208 and 212, is going to be tough areas for it to break. At that point, we could probably look to short this stock again. If the market is giving us signs of turning over, I will definitely look. It could hit it tomorrow. It could turn over tomorrow. Volume is getting weaker and weaker on these. Today's volume was very weak. Let's say it like that. But our trends on these short-term charts are kind of turning over and saying that we should move slightly higher. We'll see what the ADX indicator reads tomorrow. But on the monthly and weekly, these stocks have already turned over. Of course, we were taught Visa back in August, September going down because it was already weak. And it actually fulfilled. This is not a trade. I should have put it in the account. I didn't do it, but this was a trade that we were talking about, that it would go lower when it was up in the 215 area going down to 200. So we'll look for another opportunity to hit it again. What else we have? When does Google report? Did they report it already? Yeah, they reported. Yeah, they reported on Friday, didn't they? I think it was Friday. You can see the downward move here. This Bollinger Band has come in. This one is still out, but this one coming in is telling us that this downward move is probably on a delay right now. It's probably going to take a break. It might have a slight retracement back up before actually going lower. Google broke at support that we talked about at 550. You can see that's the line that we had drawn out, and it went down. It's down at 510. It's probably near another support level. Remember, always go back right to left. In this case, we go back a year. Let's see what we find at 510. Some reason it might be stopping right here. And you can see right here in May, there it is. That's the reason why you're stopping right here, because you have buyers here from May that are now trying to buy back in again. So in this case, we will see Google try to move higher, but you also, what will happen, that's with stocks, if it can get through this area, you're going to see a bigger sell-off and to the downside. And then at that point, you have to go back even further to find the next area on Google and where that area could be. And it's probably going to be 470, 480 the way Google moves. Probably about 450, somewhere in there. Waiting for it to go further here. It's not giving me the data. Uh-oh. I don't know if because of the split that it did, but it's not giving me the data from 3 years, which is interesting.
I think, I don't think they give you that data.
Yeah.
It only goes back to the split date.
Yeah, I'm trying to put in the newer symbol. There we go. All right, you got to put an L in. So right
Um,
here, you can see 522. We're there. So the next level. Ooh, we got a nice gap. Let's blow it up right in here. Um, so right here, you can see you got the 17th of October last year, and you got the low is 487. If
Wow.
we break this area, we coming back and we're going to try to fill this gap on Google. And this is when things are starting to get bad. So you can see Google back at 450 in the next 6 months, probably, if not before that. That's probably where its target area is. I would look for Google in that area. If it breaks in, then it ain't no telling where it's going. You can also look at the bottom of the gap, which in this case is 487, but it more than likely would trade inside the gap. I would look for it to close because, like I said, all gaps have to be filled. Sometimes, in this case, this is the 13th, and we in the 14th, and that's been a year now. So again, this is a perfect example of how long a gap can take filled. Eventually, this will get filled. I remember Google had a gap at 200 when it first came out. It went all the way to 700 before coming down and filling that gap when we had that big downward move in 2008. Um, so it's the same scenario that's kind of lined up, not exactly, but we got a huge gap that needs to be filled on Google. If I'm trading this long term, it's very expensive, even with the options. So you might kind of play it month to month and kind of catch it falling. I would not trade it up if anybody trying to trade it to the upside. Not right now. When you could really, I mean, if you see it take off and the market is behind it, then you could see Google try to trade back to 575, this area right here. Other than that, you don't really want to trade this stock up. It could be very dangerous for you to do. But these 550, you can see that was a key zone between May and July right here. You can see a trade between those areas. And this kind of what you got to do in stocks. You got to kind of measure. Remember, everything is like steps or floors. They're going to move between the floors, and you got to identify the floors and whether you should be trading that floor. If you do see a turnaround right here, you can see here this is kind of making higher lows. All right. Um, so this is a low, this is a low here. So it could be trying to set up and start, but it's a long triangle that it could be trying to start. But right now it's not there. So really you just got to case follow. If the market is trying to turn, more than likely this is going to try to turn, especially as the earnings settle down. But 450 is probably my target on Google that I would look for based on the charts and what has been happening. You can see that it was in this type of thing that Chipotle was. It was making lower highs. You can see here's the first high up here in March. We had the bullish market going on, and it could not get back above that. It actually made a lower high in July and August of this year than it did in March, and the market was moving higher. That was a clear sign of some weakness in Google. And then when it came back up over here, it never got back to those areas again. So those are another signs of short because every time it tried to break out, what happened? It failed. So you can see here, failed over here, got up here, failed, got up here, failed, got up here, failed. Those are all signs of short Google. Every time, fail action. You can see the dojis and all the shadows over here, just kind of weakness up in the 600 area. People want to sell. The fact that it couldn't hold 600 over here in September was clear signs of weakness because every time it got above 6, the sellers came right back in the next day. Here's a bear Sasha. Here's a bear Sasha. And the bear Sasha is typically what that is that it closes high. It opens in the middle of the next day. You can see the top of this candle, it opened, and then it closes below the low of that previous day. So here you can see it closed, it opened in the middle on 9/9 of the previous day, it closed low of the previous day. Same thing here on the 9/19. All right, and then we traded lower from there, and the market with it right along with it. So this stock was a perfect short candidate. I think we talked about it. That's why we had these lines prematurely on here already. Being a good short to take. It's just a volatile stock, and you got to be careful with it. But once it broke the 50 in here and it stayed above it, I mean below it, like you see here, close here, and then here's the retest, retest, retest. It never closed back up 50. Here it closed on the 50. It never sustained that, and all this was a clear sign right here. If you ever see something like this, you can see it broke the 50. It traded up. It came back down near the end of the day, and it closed right at the 50. That is a clear sign of weakness because that no bulls or buyers came behind that to hold that stock up, and that led to that was actually a great entry. It gapped down that next morning at 585, and then it traded all the way down to 520. Right here was earnings. So if we just take, we don't like to trade earnings most of the time, but you can see 585 down to 540. All right, that was maybe even lower if we, was holding on. But if you just take that, it was a 40-point move. We won't count the last couple of days here. So I'm hoping everybody can see like the technical analysis, the things, and this is stuff we talk about in class and stuff like that. But we have to be able to go back, right to left, and understand let questions get out the way and kind of analyze what's really happened with the money in the chart, the bulls and the bears. What are people doing with the money? What is the candlesticks telling us? I'm going to have a candlestick class. I was hoping the baby would be here soon, but we have not had the baby yet. I want to kind of get that out the way before I start another class because I want to kind of be able to focus on the class and give you everything that you need to know. Also, now that I'm hoping this join.me will work great. I know we had a little difficulty today, but it has worked better than the Fuse. So hopefully this will work out, and then we can use this. You can see the measurement of this downward. Yes.
Interrupt you for a minute.
Go ahead.
I just noticed I was looking. I got a message from. I'm sorry. This was from Fuzz, the other thing we used, because they were looking that you had to upgrade to get on their internet. So forget it.
Okay. Yeah, we cut them out. You can see the downward trend ADX on Google has been strong. It has a strong downward trend intact. Only thing about this one is pretty sharp to the downside, so I wouldn't be surprised if it takes a break. And I think we saw that on the Bollinger Band. Any stocks that anybody want to look at or anything in particular anybody want to talk about or go over that you might not understand or you might have a question on, let me know now, please.
Well, my question would be is when you compare the two charts of the S&P 500 and the Qs, wasn't it seemed to me when you were talking the Qs seemed to be a little bit more bearish than the S&P candlesticks. Am I right or wrong?
That is correct. The Qs are slightly more bearish, but when you look at the chart, and I'm gonna go back to it here, like we got a little pause here. We go look at the Qs and the S&P. Dang it. See what happened there. On a monthly and weekly, they're the same. They bounced off the 50. They're definitely turning over. It's just going to take time for that total weakness to kick in, and it's going to be key how the next 2 weeks of the month finishes out. On a short-term view, we're bullish. More mid-term to long-term, we're definitely bearish because of the turn. But we're going to analyze the next 2 weeks what happens here. The Qs, you can see, had the same turnaround as the S&P. All right. It's just that the technical levels that can cause a stock to come to a halt is more bearish on the Qs than it is on the S&P. The S&P is actually at its old resistance area where the Qs got a little bit more work to do. So the S&P is kind of leading the market back up. And really it's been the Qs that's been the one that's really been rallying over this rally. So it kind of tells me that money might have shifted a little bit, or people that were short or long the S&P might be trying to unload some of this losses as the stock moved back up, or people that were short. But the Qs are definitely a little bit more bearish. But overall, when you look at the big picture, the Qs and the S&P, they look the same. There's really no indicator that's hiding. One particular we looked at a while ago that was already bearish before the market turned was the Russell 2000. The Russell actually turned around before the Qs and the S&P did, or it had a huge day up. And it's always good to keep an eye on the Russell because it's a small cap. It focuses on the small caps. But it started to turn up in here on that, let's see, this is Monday, Friday, Wednesday, Thursday. Tuesday, it actually started to turn a little ahead of time with the S&P. So it's just something to keep an eye on. It's trading right now at the 20-day moving average. But its major support is right here at 110. It's only $1 something away. It could see that tomorrow. You can see it had a down day on Friday, even though the market was up. So that's something to remember. But let's see if it could take out this 110. The small caps can be a clear sign of what the market is going to do next based on what it does. You can see the ADX turn over on this. It doesn't have the downward. You can see the downward trend strength on this was already kicked in, unlike the market. It was up to 43, 44. Once that ADX starts to get up to the 50, 60 range, the trend is a little too strong. So in this case, this is not bad. 40 is still decent. But just let's keep an eye on the Russell. That's going to be a clear indicator of the short term. Long term, the Russell's already broke down.
So you're looking for the Russell to break above 110 as an indicator that
the market that you could see the S&P also break out based on that, or the Qs. If you see the small caps out, which hasn't happened. I mean, this rally here is just a quick short-term pull-up. It's normal after you have corrections like that. What you want to see is that, are we going to turn into another rally back to the upside? In this case, I don't see it. I mean, I see bullishness could creep in on the charts. You have to become more bearish neutral, if that makes sense, before becoming bullish in the market. If anybody's long, you have to have stops in, safe stops, because at any given point, the market can turn around. Everybody's favorite, Facebook, had a nice bounce on it, which it did, filled its gap back in July, filled the gap, and then it turned around and popped up. Facebook is going to try to take out the high. It's a nice looking stock. It's still bullish. Hasn't had a major correction yet because, of course, the little guys is in the stock like crazy. So, they always the last one to make the right decision. We're going back to that top. Right now it's already at 80. This is a strong move today. It broke the 50 and the 20. So if the market continues to turn, which it looks like it's trying, I could see Facebook going higher. Could be a good stock to trade to the upside if anybody looking for something long. It'd be nice if it takes a break. If it turns back down from here, then you're closing back below the 50 and the 20, and more than likely that's going to lead to go and close the gap that it just gapped up at right here. Right in here, it gapped up. So let's keep that. Might be a good potential short-term loan that we can trade or look into. All right, because it's still strong. If the hands are still in the market, or the little guys still in the market, then it's definitely a stock to look at. So let's take a quick look at weekly swap report. That's a new report. Let's look at the weekly trader report real fast before we get all line. Sorry about the delay of getting on here. We shouldn't have this problem going forward no more. now that my hardware crashed on my one computer, and I've been waiting for my other one to get here. It finally got here, and now everything is being loaded that need to be loaded on. I'm hoping to get a call here any day, so I mean any minute, so I could pick it up. So we should be fine from here as far as getting this call and everything working. Let's look at this futures report, and let's go down and take a look at the E-minis from last Tuesday. Of course, they're going to be taking numbers again this Tuesday or tomorrow, and we will know Friday or what that looks like. But let's see what it looked like last week to see if it kind of explains why we had the turnaround we did. And for some reason, I can't find it. Oh, here we go. All right. We can see here who is long the market as of Tuesday last week. It is the little guy. All right. They are long the market, and if this stays this way, now it's only 9%. Now remember, I like to see this number at 11, 12. That's how we knew it was kind of a correction coming, because when this number gets really high, it's always a sign of weakness coming into the market. You can see the big money is still short as of last week. Obviously, they must have been doing some short covering, so that's why we have this rally that is happening right now. Because of the E-mini S&P, there is some type of rally mode going on right now. If we go over to our S&P consolidated positions, which is a little smaller, we can see that the little guy is still strongly overbought at 12%, still getting long the market. And where is the NASDAQ? NASDAQ, that 100, the Qs, you can see that they're taking money out of the market to the sidelines, and that the big money on the NASDAQ 100 was getting short. So it's just something to pay attention to. They're not heavily long, but the fact that they're taking all these positions off is kind of telling you what is happening right now. We definitely see what happens on Friday, what it looks like for the coming week. This is kind of telling us that guy is really the one that's participating in this rally, and that the big money is probably just covering their shorts because they were heavily short as of last Tuesday. And then remember, Wednesday, Thursday came, we had that big turnaround or profit-taking session that caused the market to move higher. So we keep an eye on this report over the next couple of weeks to see how money moves. So if we pay attention here, we can always go back and look at this, though. You can see the money here, the open interest that is here, that's came into the market. That's always something to pay attention to. So we'll see how that interest changes over the next couple of weeks. Is there anything else anybody want to look at or talk about before we get off the call tonight? All right, remember, you can always email me. The Planet Wealthy YouTube page is going up, and also you can tweet. That is officially should be up this week and going. I think, Mike, I saw you join, so that's going to be up and going. Yeah, I think I seen you on there. And, of course, the Facebook page is up. And then we kind of go from there. Look for the classes. The meetup is on there for the meetups. And that's really, really all I have for right now. Look for the market to possibly trade up a little bit more. And then we're going to look for opportunities to short this market again and take advantage of it. Remember, long term, we want to have puts on for the S&P and the Qs. There is some beautiful plays out there for an actual crash that you don't have to spend a lot of money on. That would be magnificent options. Maybe I'll send them out as a trade idea for you so you can take a look at them and decide if you want to do it. If you got a little extra cash that you don't mind risking, then maybe it's something that you look at. Because if we do get the type of crash that we're looking at, or the type of move down that we're looking at, those could pay very well. And those are just long-term options that we're looking at for January 2016, I believe it was. I have to go back and look at it again. January 26th, and some opportunities out there. All right, and that's just something as a long-term ideal. Of course, we can always go higher. And again, like I said, if we break those highs, and I said this before, if we break those highs, we're going to see 20,000 on the Dow. We're going to see S&P trading at 2,500. We're going to see those big numbers because if we break those highs that we couldn't break in August, November, December, August and September, now money is going to already coming back in the market. Money's really going to come back into the market at that point because they're going to see it as an opportunity, which also tells me that it also sets up for a bigger crash too. But we'll see as it go here. Of course, we don't predict the future. We don't try to predict the future. We're not going to tell you, hey, the market's headed for this big move up or it's going to hit 25. We just kind of look at it from a technical analysis perspective and history and kind of just point it out and line it up just like we did with the last move in the market here. And that's kind of be the focus to continue, the mindset that we have to continue for here. And when you're looking at charts, you got to keep that stuff in mind. I do, in this case, see opportunity to, if you have a 401k or a retirement account, if you are interested, you can look into putting some of your money into cash or into more safer opportunities or safer stocks or things or whatever you have it invested in, just to kind of take some of the risks off the table because there is possibility of more major things coming down the line. All right. Again, everything we talk about on here is for trading education only. It is not investment advice. You do everything at your own risk. Trading options, trading stocks, everything that we talk about here is risky. Future performance is not an indicator of past performance at all. All we doing are trying to put the best probabilities in our favor when we look at charts and come up with trading ideals so that when you're looking at charts on a regular, which you hopefully should be doing, that your education IQ kicks in and that you're able to read and understand charts at a greater level. If you have any problems with that, please email us so that we can talk about it and help you understand whatever you're looking at. We'll do our best to make sure you understand. There will be classes coming in the future or starting back up in the future here. So just keep an eye on the lookout for them. I know some people need it and want it, but we kind of had to take a break from that for a minute just based on everything we had going on. And then I kind of hoping that the baby will be here this week, but that didn't happen. Of course, I have no control over that. So we will look. I'm gonna try to maybe do another live update on Thursday, or we'll do just a regular market update, and you'll get the email, and you can kind of listen at your own convenience. All right, everybody have a wonderful night. Happy trading this week. Everybody have a blessed week, and I look forward to talking to you in the future. Thank you.
You too. Thanks, Raj.
Bye.